Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 280 on July 21st, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Rocket Lab USA Inc., NIO Inc., and Robinhood Markets, and we discuss three new trades on Sirius XM Holdings, Xpeng Inc., and XP. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I also teach students how to trade options, not just study theory, with the combination of videos and live coaching calls. If you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the equity markets finished the week higher, with earnings driving much of the sentiment. The Dow Jones Industrial Average gained 718 points, closing at 35,227 points. The S&P 500 index grew 30 points, ending the week at 4,536 points. And now it's time for the topic of the week. The topic of the week this week is trades that benefit from big moves like earnings. Now, there are several technology companies that will report earnings this upcoming week. One of the strategies I like to use for capturing big moves is 1-by-2 ratio spreads. And this is sort of an advanced strategy. Specifically, I'm interested in selling one option in order to finance purchasing two options that are farther out of the money. So let's say you think prices are going to fall significantly. You would sell the closer to the money put spread and buy a strike farther out of the money. This essentially leaves you short one spread, like a credit spread, and then long a free option to boot. You would do the opposite if you expect the price to rally significantly. You could sell a closer to the money call option in order to finance two options with farther out of the money strikes. This will leave you with all of the typical risk of a credit spread, while still leaving you with one free option in case the stock truly rallies, kind of like what Nvidia did last month. The other strategy I like to use for capturing big earnings report moves is debit spreads. Now, as you guys know, I typically buy spreads that are in the money. However, one of my students put on a debit spread during the last earnings season that captured a 20-point move in the stock almost perfectly. He bought an out-of-the-money call option and sold a call option nearly 20 strikes away. Going into earnings this week, I'm looking for ways to profit from big moves. I think it's going to be a good one. I also know how to protect myself in case the moves don't happen the way I want. So you have to make sure you understand risk, right? That's the game. Maximize profit while minimizing risk. So if you have any questions about the strategies I talked about on the show, or even have a couple of extra strategies that you like to put in yourself, shoot me an email. I'd love to hear from you. All right, let's go ahead and get into the trading review from last week's trades. We'll start off with the covered call on Rocket Lab USA, symbol R as in Romeo, K as in Kilo, L as in Lima, B as in Bravo. At the time, the stock was trading for $6.32 per share. I looked at buying stock and selling the August 7 call at 30 cents, which could give us an expected return of 15.51% in 5 weeks. Well, shares of Rocket Lab picked up $1.18, ending the week at $7.50 per share. The call option we sold gained 60 cents, leaving us with a net gain of 58 cents if we were to close the trade out immediately. Now, that's actually 59% of our expected return, which isn't bad 4 weeks before expiration. This trade has worked out as planned so far. We still need stock to expire above $7 to capture the maximum return on this trade. So no adjustments are needed at this point. Of course, you can always roll the strike higher to try to capture even more possible profit on the stock price move. We always talk about rolling the stock or the strike of the option lower when price moves against us, but you can do the same thing when the stock goes higher as well. It just increases the likelihood that you're going to continue holding the stock past expiration. So always do the math to make sure it makes sense for your trade and your portfolio before taking any trades from anyone, or certainly before making any adjustments. All right, next up we have the credit spread from last week on NIO Inc. Symbol N as in November, I as in India, O as in Oscar. At the time, the stock was trading for $10.54 per share. I looked at selling the August 10-9 put spread at 31 cents, which could give us a maximum possible loss of 69 cents per spread. Well, shares of NIO or NIO grew 3 cents, closing at $10.57 per share on Friday. The out-of-the-money put spread that we sold is still out of the money. I'd be happier, of course, if this stock rallied a bit, but it's still doing just fine. As long as this stock is above $10 per share at expiration, this trade will expire fully out of the money, and we'll get to keep the full premium we collected for selling the spread. So no adjustments are needed just yet. All is going well. Just keep an eye on all of these trades. And I like to remind everyone to keep an eye on your trades. Trading options is not passive. Now, it's different than day trading. Like, you don't have to be glued to the market all day long, but you do need to be aware of what's going on with your position and with your risk. All right. Finally, from last week, we had a debit spread on Robinhood Markets. Symbol H as in hotel, O as in Oscar, O as in Oscar, D as in Delta. At the time, the stock was trading for $12.38 per share. I looked at buying the August 11-12 call spread for 60 cents, which could give us a maximum gain of 40 cents per spread, or that's a 66.67% return in 5 weeks. Now, shares of Robinhood grew 38 cents, closing at $12.76 per share this week. The in-the-money call spread that we bought is still in the money. Now, there are a number of things I like about this spread. Of course, there's 4 weeks left until expiration, so we want stock to expire above $12 per share to capture our expected gain of 66.67%. So definitely keep an eye on stock. No adjustments are needed just yet, or even recommended at this point. Sometimes I just have to leave it be. I end up wanting to expand it and make it pretty and make it fancy, try and capture even more profit. But sometimes the adjustments can lead to more pain than they're worth. So I'm leaving this one be. Let's see what stock does in the coming weeks before we make any adjustments. So that's it for the trade review. Today, July 21st, was expiration for all July monthly options. So make sure you're on top of all post-expiration risk and have a game plan for Monday. Sometimes if you owned a call option that ended up expiring in the money, and you were using a regular option, like a U.S. equity option, then you're going to end up long some stock. So you need to make sure that you have a plan for what you're going to do on Monday morning as far as keeping that risk, minimizing that risk. Just stay on top of it. Doesn't have to be anything scary. Your brokerage oftentimes will help you figure it all out. Just stay on top of it, have a plan, and go in with your game face on. No, I'm kidding. All right, so all new trades this week are going to use the August 18th expiration date for monthly options in August. Let's go ahead and dive in. So we're going to start off with the cover call on Sirius XM Holdings, symbol S as in Sierra, I as in India, R as in Romeo, I as in India. The stock ended the week at $7.08 per share. I'm looking at buying stock and selling that August 8 call at 55 cents, which could give us a return of 20.76% in 4 weeks. Now, you enter this trade by buying stock for $7.08 per share and selling the August 8 call at 55 cents. This trade makes the most money if stock prices finish above $8 per share. The break-even price is $6.53 per share, and in real terms, the stock purchase will require $708, and you'll collect $55 for selling the option. Next up, we have a credit spread looking at Xpeng Inc., symbol X as in X-ray, P as in Papa, E as in Echo, V as in Victor. The stock ended the week at $14.56 per share. I'm looking at selling the August 14-13 put spread at 37 cents, which could give us a maximum possible loss of 63 cents per spread. Now you enter this trade by selling the August 14 put at 87 cents and concurrently buying the August 13 put for 50 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $14 per share. The break-even price on this trade is $13.63 per share, and in real terms, you'll receive $37 per spread that you sell and have $63 at risk. And our final trade on the week is a debit spread. I'm looking at Xpeng Inc. Symbol X is in X-ray, P is in Papa. The stock ended the week at $26.29 per share. I'm looking at buying the August 25-26 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 4 weeks per spread. You enter this trade by buying the August 25 call for $2.45 and concurrently selling the August 26 call at $1.80. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $26 per share. The break-even price is $25.65 per share, and in real terms, you'll pay $65 to enter this spread, and your maximum gain is $35 per spread. So that's it for this week's show. Thank you guys so much for all the emails. I've gotten a ton of them lately. Very cool. I am working on a project that I think is going to really benefit this community quite a bit. Hopefully I'll be able to launch it next month. So fingers crossed. I've got my head down, working a bit in addition to trading, trying to pull my team along as well. So just want to make sure I'm supporting you guys with everything you need. And to that, in that same vein, if there's anything you need from me, because I really do appreciate you guys listening, definitely shoot me an email at eric@theweeklyoption.com. If you're listening to this on YouTube, go ahead and hit the subscribe button as well. Hey, it doesn't cost you anything, but it really does benefit me, so I appreciate it. You guys have an awesome weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.